Primary drivers of the Chinese economy. As of 2019, China has the second largest economy in the world with a GDP of $14.3 trillion, behind the United States GDP of $21.4 trillion. If the economy were represented in purchasing power parity, PPP, China edges out America as the largest economy with a purchasing power of more than $23.5 trillion. How did China go from a poor society devastated by World War II and its own civil war by the mid-20th century to the number two economy today? After decades of economic stagnation and setbacks under communist rule, China began to open itself to international trade and liberalize the economy when it established diplomatic and trade relations with the US in 1979. As China's subsequent export growth fueled the growth of manufacturing and urbanization, China rose to be a major global economic power over the next 4 decades. China has faced criticism about how its economy has been able to sustain an average annual growth of almost 10%, though this has slowed in the last few years with a growth of 6% in 2019, still within China's growth targets. Namely, the government has been accused of manipulating the currency to keep Chinese exports attractive and of not disciplining companies that engage in intellectual property theft. Key takeaways. China's economy has grown to one of the largest and most powerful in the world over the past few decades. Driven by industrial production and manufacturing exports, China's GDP is actually now the largest in terms of purchasing power parity (PPP) equivalents. Despite this growth, China's economy remains strictly controlled by its government, where there are accusations of corruption, unfair dealings, and falsified data. Industrial growth. Like most countries looking to develop their economies, China's first step was to build up its heavy industry. Today, China is the world's leader in manufacturing and produces almost half of the world's steel. China's mining industry extracts coal, iron ore, salts, oil, gas, and gold. To reduce China's dependence on coal, the country is moving towards more renewable resources and plans to increase its natural gas use in the coming years. China also has multiple oil reserves as well as natural gas deposits that have yet to be fully explored. The country is also a good candidate for hydroelectricity production, and in 2012, the Three Gorges Dam was completed and is now a major producer of electricity for the southern cities of China, including Shanghai. Manufacturing revenue. Most Americans know that China is a manufacturing powerhouse. Besides its large textile manufacturing sector, the economy also supplies machinery, cement, food processing, transportation devices, trains, planes, and automobiles, consumer goods, and electronics. Not only does China have many domestic firms that create hardware and software, but the country is also a leading assembler of foreign electronics. The Chinese software and the IT industry grew by over 14.2% from 2018 to 2019, generating revenue of approximately $940 billion. Similarly, China produces automobiles in factories owned both domestically and by foreign companies. However, most automobiles, domestic and foreign branded, are purchased by people in China, a country that had 340 million vehicles in 2019. Chinese vehicle sales did decline in 2019 by 8.2%. The Chinese automobile industry is criticized for IP theft and for a bad safety record with cars produced by domestic firms. The majority of cars manufactured by Chinese companies are exported to Africa, South America, the Middle East, or Russia. Because of China's unique distribution and sales methods, car dealerships and salespeople make a high margin on each vehicle sale. Large production of pharmaceuticals. The Chinese pharmaceutical industry is like the rest of China, growing at a fast pace. China's drug distribution system is multi-phased. Drugs pass through various tiers and expensive middle people before arriving at hospitals and pharmacies. This industry is again plagued with criticism of IP theft. Domestic firms are the majority of the market, but international companies like Pfizer, GlaxoSmithKline, Novartis, and AstraZeneca also have a presence. With China reforming and regulating the pharmaceutical industry, increasing OTC access and enforcing patents, there is a high potential for investment growth in this area. Chinese consumerism. While once a country with rationing and consumer good shortages, after economic liberalization, China can be a consumer paradise for the few with means and a love for luxury goods. China is home to some of the largest shopping centers in the world, and in addition to wholesaling, retail contributed $1.8 trillion to GDP. Companies like Alibaba have given a big boost to retail and e-commerce. Alibaba's Singles Day sale in 2019 saw a record-breaking $38 billion of sales in just one day. In 2019, travel and tourism in China contributed $992 billion to the Chinese GDP. Other services that are big in China include transportation, real estate, and construction. China's economic concerns. While China's growth seemed unstoppable at one point, there are obvious cracks in the economy that have slowed it down. First off, the country is under fire for the amount of non-renewable resources it burns through each year. With China already considered a large polluter and emitter of greenhouse gases, the expected increase in coal usage is troubling to some. Next, China is home to rampant corruption. The national government is actively trying to stamp it out in an effort to make the country more business-friendly for Westerners and to avoid the economic and business inefficiencies that come from corruption. Finally, there's the problem of underemployment and inflation in China. Chinese farmers on small plots of land are marginally useful and, in an efficient market, will be unemployed. Although inflation in 2019 was a manageable 2.3%, the last 20 years have seen the inflation rate vary widely, a concern for businesses wanting to invest in the country. The bottom line, China has the first or second largest economy in the world, depending on whether you're looking at GDP or PPP. However, perhaps significantly, the country is not nearly as developed as other countries in the top 10. Government spending is a key driver of growth, which has over the last few years led to indiscriminate construction. Even with the largest population on earth, China struggled to find buyers for real estate in its ghost towns. But the government's latest agenda focuses on stimulus to reinvigorate economic activity, and if that happens, the country has huge room to grow.